Welcome to Markets Today. I'm your host, Mbithe Mwema. Very exciting time for the world and for us here today as well. We have seen U.S. oil futures touch a low of $38 per barrel. That's negative $38 per barrel. What does this mean? Has this ever happened? Will it happen again? What does it mean if you are an investor in Mansarex? We are joined in studio by Mr. Nahashon Mungai. He is an executive director and the fund manager for the Mansarex product that is hosted under the Standard Investment Bank Group. Welcome to the show, Nahashon.
Thank you, Mbithe. Thanks for having me.
Oil. Are you frustrated? Are you excited? What's going on?
I mean, it's exciting times. And to answer your question, so since the NYMEX was founded in 1983, we have never seen anything like this.
Wow.
Yeah.
Okay. So this is slightly older than my sister. I won't say whether she's younger than me or older than me, but this is big, man.
This is very big.
Okay.
I mean, it is so big that markets don't know how to react. We also don't know how to react.
Yes.
The CME, which is the Chicago Mercantile Exchange,
yes,
has to, they literally have to redo their entire software system.
Interesting.
To see how, to price negative prices.
Wow.
It's never happened before.
How did we get here though?
So the reason we got to negative prices is a function of, it's a pricing technicality.
Okay.
So typically how crude oil futures work is you buy a crude oil future. So the specific one that was expiring yesterday is a May contract.
Yes.
So you buy US crude oil futures for delivery yesterday.
Okay.
Okay. But now if you don't sell that contract to somebody else, then you own the oil.
So people have to deliver it to you.
Yes.
And storage was apparently an issue?
Storage is an issue. And so for traders like us,
yes,
so like what we do now at Mansa, when we're buying and selling US oil futures or any other futures for that matter, even whether it's gold or anything else, we actually do not intend to take delivery of this product.
Okay.
Okay. But on the day of expiry, we expect to sell on this contract to somebody else who actually has a place to store that oil. Wow. Because he actually needs the oil for real physical delivery.
Wow.
But now because of what has happened with COVID and the slowdown in the global economy, the main place where US crude oil is stored, they have run out of storage capacity.
Okay.
And refineries do not want to take any more crude in the first place. So storage is okay, not fully. It's not fully run out of capacity, but then refineries cannot take any more crude as well.
Okay.
So now this leads to a situation where my contract is due, but then now I pay you to not deliver it to me.
Wow.
Therefore, that creates a negative price.
Okay.
So essentially, if you had sold it to me at 21, for example, I'll sell it back to you at 22.
I'm like, it's okay, I'll pay you.
I'll pay you not to deliver it to me.
I'll pay you not to deliver it to me.
And that's how you end up with a negative price.
Okay, so this is the US oil market, which is different from the Brent, the ICT Brent market.
Yes, yes.
What's the difference and how should we look at Brent from here on?
Okay, the difference is simply just Brent. Brent is really just mostly for Asia, Middle East, and African markets.
Okay.
But just going back a little bit to what we were discussing, those are futures prices.
Yes.
Okay, so that was a May contract. We still have the June contract,
okay,
which is still trading at around this morning $21 a barrel, $21 to $22 a barrel. So that is still pricing. That's a price you should really be looking at.
Okay.
This is really just a mispricing. Not a mispricing, a pricing technicality on delivery of the contract.
Ah, interesting. So
but
it's irrelevant. Okay, it's not so irrelevant, but it's good to know, but
it's only relevant in the sense it shows you what might happen in the future.
Yes.
And it shows you just how strained storage capacity globally are.
Yes.
And it's even more interesting when you look at what has happened in the oil industry over the last few years, especially after Donald Trump came into power and deregulated oil markets.
Yes.
Because then you have US shale oil producers who use a system of mining oil called fracking. Right now, they still have to continue pumping oil out of the ground.
Okay.
Because if you stop pumping oil out of the ground, you literally have to go back to scratch in terms of setting up the entire infrastructure for mining.
Wow.
Meaning that even with lack of storage capacity, they'll still have to pump this oil out of the ground.
It's more expensive for me to put my lights off if I am a extractor of oil in US.
Exactly.
So I'd rather sell it at a negative and just deal with that negativity.
Or not sell it.
Or not sell
it. So just pump it out and now spend a lot of money looking for storage capacity.
Okay, it's interesting when you bring out the element of deregulation, especially in the US markets.
Yes.
Because typically the way the oil markets work is you need regulation, at least to regulate supply, so that you can be able to regulate the price and ensure that the producers are actually being awarded.
Yes, and this happened during the Obama era.
Yes.
But when Trump came in, the first thing he did was
Is
to
that-
regulate the oil industry.
Forget it.
And for obvious reasons, a lot of them are U.S. Republican backers.
Okay.
And this helped put the U.S. as the biggest oil producer in the world, but it's much more expensive to produce oil the way U.S. shale producers do it. So right now they're hurting significantly.
Okay.
Yeah.
So if I stick to on the fundamentals, this is what's happening in the U.S. oil market.
Yes.
Is that a similar situation in terms of looking at Brent or looking at
Absolutely.
OPEC, Saudi Arabia, Russia?
Storage capacity globally will be an issue.
Okay.
It will be an issue. So even looking at the June contracts, we expect that this will also lose value.
Okay.
moving
What about
forward.
Brent crude
Even
prices
Brent
for
crude,
spot prices?
Brent crude as well.
It was
This
similar
morning-
trajectory negative?
Yeah. Oh, not negative.
Okay.
Not negative.
Okay.
But yes, they
Yes.
will definitely take a hit.
Okay.
Definitely, yeah.
Okay.
So futures will always be peculiar because of that need to deliver today.
Yes.
You see, underlying spot, what now you call a spot market, now the one you're referring to, like Brent and the normal markets, they cannot, very quickly gap to negative prices
Yes.
because at the end of the day, it's still a commodity that has value.
Yes.
But for a futures contract, it only has value if somebody's willing to buy that contract from you.
Jeez.
So if there's no one to buy that contract from you, then it can go to zero.
Okay.
So that's the difference
That's
between
the
those
difference.
those two pricing mechanisms.
It looks like there's more value on Netflix and chill than on actual
Absolutely.
oil. All right, but
Yeah.
let's look at
Yeah.
the Monster X fund fact sheet. And before
Yes.
we actually go to what happened in the past,
Yes.
I wanted us to go through your asset classes.
Yeah.
And in one of this, you do say that you have access to commodities.
Yes.
Were you exposed to this U.S. oil futures that closed out yesterday?
Yeah, absolutely. So we trade those, and I think we have been saying this for a long time, that we've been expecting an oversupply in oil, and therefore we have been short the U.S. oil
Okay.
markets. How specifically we made that play, I cannot disclose.
Okay.
But yes, we had exposure to some of these contracts.
But you
yes.
didn't lose money yesterday.
We did not lose
You
money
didn't lose money
No, we
yesterday.
didn't.
Okay,
We
are you
didn't.
exposed to the June or the September contract?
We are exposed to the June contract.
Okay, so that's
Yes.
those are the key ones that we're looking
Yeah,
at.
yes.
All right, but when I go through your asset classes, so
Yeah.
you do also have there's currencies, precious metals, commodities, cash and cash equivalents, derivatives, and single stocks and stock indices.
Yes.
There's what's happening in COVID. There's what happened to U.S. oil futures yesterday.
Yes.
What is your overall thinking right now when you're looking at these different asset classes?
So first of all, Q1 has been such a wild ride
Yes.
that it's very hard to call to make very confident calls on any asset class
Fair
right
enough,
now.
fair enough.
But there are some asset classes which we've been, when I last sat here, I mentioned to you that we've always felt that there'll be increased volatility because of the COVID and pandemic, and that actually happened.
Yes.
And one of the things that we kept saying was it would be nice to, or rather it would be advisable to hold a gold portfolio,
Okay,
because
so
over
gold.
time that
Okay.
will definitely be useful. So even now that remains.
Okay.
We are still very bullish on gold, if not only just to give you returns, but also to protect your portfolio.
So it's a good point for hedging.
It's
So
a good point for hedging.
your exposure to gold, is it through the ETF on the Nairobi Securities Exchange, or do you have other gold asset classes?
So we hold different, we hold various gold asset classes, but even in the NSE gold ETF, we
Yes.
are big supporters of that as well.
Okay.
And we believe that, we actually get surprised that there's not a lot more activity there.
There should be, actually.
There should be, because actually the NSE gold ETF is backed by real physical gold.
Wow.
So it's really a very nice way to own gold.
Okay, and there was a
Yeah.
slight uptick on oil prices yesterday. It was very slight. I think I saw it at 1,700.
Gold prices, you
Yes,
mean?
for
Yes,
gold
yes,
prices,
yes.
for gold
Today
prices.
just slightly low at 1680.
Slightly,
But that's still
1680.
really high. We
Yes.
have been buying gold since the 1200 levels.
Wow, oh,
Yeah,
fantastic.
that's in 2018.
Okay,
Yeah,
so
yeah.
then when we're looking at the quarterly performance, I suppose that's one of the key contributors.
That's
to
one of the key contributors, yes.
You did do 24, almost 24.5 percentage points in terms of return
That's
for the
correct.
first quarter. Can you maybe walk us through what was happening there?
So I'd like even first to just say how the fund works.
Okay,
Because,
yes,
because it's not just the return that we like to talk about. And this is one of the things I'm really trying to tell investors at this point in time, that this fund, and we have always been clear about this, is a multi-asset strategy fund.
Okay.
Meaning we can get into asset classes and we're able to make money if they're rising in value or if they're losing value, which we call going long or going short.
Okay.
So what this helps us to do is during uncertain periods, and we're in an uncertain period. No one has ever gone through anything
Extremely
like this.
uncertain.
I mean, 2008 looks like child's play compared to what is happening now.
Sorry to say, pardon my French, but he said over the weekend, sit on your ass. Like, don't do anything.
Who's
because
that?
it's very uncertain. Chris Mungai and his Warren Buffett's partner. Because
don't do anything.
Just sit on your, and he literally said verbatim, okay, I shouldn't be repeating this, but he said literally, because it's uncertain times.
It's really uncertain times. So even for us, what has helped us to squeeze out a return is purely because we are able to go long some assets and short some assets.
Fantastic.
Otherwise, if we were a long-only fund,
I
highly doubt there's any long-only fund that actually made money in this crisis. And that's not just in Kenya, but globally as well. So that's part of the reason why we got those returns. And the other thing we like to emphasize is that this fund actually protects you from losses. Okay, because it's a very good way of diversifying your portfolio. So even if you made a loss, it will not be to the extent of if you were long only certain asset classes. So like in Kenya right now, a lot of Kenyans, their assets, are, if they're not in the stock market, is probably in real estate.
Yes, there's really not too much diversity.
That's the next conversation we need to be having. Because that's one area where value will be shared. I think it will be runaway pricing. Because at some point Kenyans will need liquidity, and their liquidity is sunk in real estate assets. So that's how a fund like this protects you, because it then balances this out for you. So the biggest winners for us, when I last sat here, I actually mentioned to you that without the stock market would go up. Because we felt that Donald Trump, and he did, would continuously pump liquidity into the markets, and that would help the markets go up. Now, that worked for a while until, obviously, the symptoms on the economy from the COVID pandemic now caused a complete retracement of this. We expect that there's only so much a stock market can stop being a reflection of the underlying economy. So right now, the entire U.S. stock market is where it is purely because of Federal Reserve funds. So think of it as a dying patient on an adrenaline shot. Okay. So once that adrenaline shot wears off, it's going to be, we believe, we'll see a massive retrace, unless, of course, we have a breakthrough in COVID before the adrenaline shot wears off.
Well, I mean, the impact of COVID, it's unfortunate, but it's you can't really call it and say it ends tomorrow.
That's the thing.
So that's the hard.
Very unpredictable.
That's the harder thing. But it's interesting because when you also talk about the U.S. stocks, it's not that the emerging market stocks are not going through a similar sentiment, because we keep seeing foreigners actually exiting out of Nairobi stocks, out of Lagos stocks, and etc. But okay, so if that's the outlook on stocks, what about currencies and derivatives? What did that look like? So
currencies have been interesting. A lot more volatility, and this has therefore meant that there are some more opportunities to trade and squeeze out some returns from this. So this actually helped us as well. So an example is the cables, which is a pound against a dollar. Shared about 6% in the first quarter alone. Now in currencies, that's a big deal. Think of it as the shilling losing about 10 shillings against the dollar. So 6% is a big deal. And do we expect this volatility in currencies to continue? Absolutely. And we expect that currency pairs that are also linked to commodities will see a lot more volatility, a lot more swings. We are looking to take advantage of this. So this is called proxy trading of the same commodities that you're trying to trade, but not directly.
Are there certain pairs that really stand out for you at this point?
So like the dollar against the Canadian dollar is a very good proxy for trading oil. Because Canada is the largest trading partner for oil to the US.
Interesting.
So that's they have a direct correlation. So you can always trade such pairs as proxies for commodities, and this will remain a very exciting area to watch for traders in the next quarter. Why? Because you're able to trade these commodities by proxy, make a return from them while still exposing yourself to less risk due to the dangers of gapping of prices in commodities.
What about Great Britain? They resume the conversations on Brexit this week, and I mean, is there any impact on that particular currency, and what pair would one be looking at to make any moves on it?
So I think for the pound has always remained a headline risk currency. Brexit has obviously, and then the fact that now, you're obviously now in a recession. Fears of a recession will continue to weigh down on this currency pair. But you see, now it's really an issue of who's the worst in a basket of bad apples. Yeah,
that question, I've been asking that question as an investment strategy for the last 5 years. I'm not too sure if it's a question I want to keep asking.
It is crazy.
It's a crazy question.
Yeah, it's a crazy one.
Now, should we take a quick break? Then
Yeah.
when we come back, we can delve into the performance of the fund and what to expect
Okay.
for the next quarter. We take a short break. Let us know if you have any questions in as far as Mansa X is concerned or any of the underlying asset classes. You can reach out to us on Metropole TV on Twitter, or you can reach out to me directly as well on Bithamwema on Twitter. See you after the break.